The broadcast is now starting. All attendees are in listen-only mode.
Hello, everybody. Hi, Alexandros, Armand, my trading warrior brothers. Hello, Patrick. Kamehameha, in from Hawaii. Everyone hear me okay? Yes. All right, I just have a couple of things before I pass it to Blake. Here was our pattern in play in gold. We identified it on the solstice. Everything's in gear in gold. Okay, so let me just get to here. Here was a 3 driver. Take a picture. Luca in the room bought it down here. We've cleared a lot of moving averages. Let's take a look at the weekly action. I think we have a nice weekly reversal in gold. Yeah, turned up. So risk reward still looks good. We penetrate these highs now. If you look at what we have here, it's potentially a massive ascending triangle with a breakout over this 1295, 1300 area. Could be huge. So one day at a time, one step at a time. That's the gold. Also want to remind everyone that Canada was also an excellent call. Okay. See what it's doing here. Getting a little bounce back here in Canada. Still looks pretty negative to me after the big break. And Blake, you couldn't convince him about the downside in euro. Also our guest yesterday, and the euro's really all it's done is move sideways. Looks pretty good. Hope everyone had a great week. Yeah, plenty of room, Ron. Plenty of room. So we have a Nostra Pinkert situation on Kiwi Yen. All right. I'm going to pass it over to Blake. I know he wants to come on early. Hi, Blake.
I don't want it. I don't want it. It's Friday.
You don't want it?
Nope. It's Friday. I'm taking right now off.
Okay.
I'm just kidding.
How's it going? Good. How are you?
Good. I'm actually a little bummed out. I missed this gold. Last night, a trader that I trade with, Chi. Hold on one second.
Okay.
Okay. Sorry, I was just responding to somebody. This one trader that I trade with, his name's Chi. He picked up gold overnight, and I missed it because I was long so much. Here, I'll take over the charts. I'm long. Not actually. I should take that back. I'm short a lot of dollars right now. So being short the dollar and long gold is basically the same trade. I mean, there's a lot of trades that I look at that I go, okay, if I bought gold, it's basically the same trade as being long the euro dollar, short the US dollar Swedish krona, short the US dollar Norwegian krona, short US dollar Japanese yen, which I'm in all those trades right now, parsed out, amongst into different positions. So being long gold is just adding another, I would be too over leveraged in the position, and the one trade that's really highly correlated is the dollar yen and gold, and because I closed out like some S&P short exposure, I didn't want to close out my dollar yen, which I would have been better off buying gold than being short the dollar yen, because the dollar yen hasn't gone anywhere. so I made a mistake by not choosing gold and going with dollar yen instead. But I was more worried that the S&P would and as you guys know, and I don't know, well, maybe you're not watching, but you should be watching. The S&P is really near key support, and on the futures, it's 24.28 for this ETN, or this FXCM ETN. It's 24.30, but as you can see, we got a lot of really key support here, and I wanted to stay short some dollar yen just in case the stock market decided it wanted to break down overnight. Well, it didn't. Hold on one second. So it didn't. So it's bouncing back, and so the dollar yen hasn't done anything either. But that's the reason why I was staying. I didn't get in gold, which like I said, it would have been a better position. I would have bought it below 1250, and we're sitting at 1256 right now in gold. So anyway, so I chose wrong, but I had to make a choice. I'm still long the euro though, and I want to point out the euro a little bit here. And there isn't a whole lot going on at this moment, but the European PMIs. So the services PMIs missed across the board. The manufacturing PMIs beat across the board. Now the euro. Originally on that news, it spiked up. This is an hourly chart. We spiked up. We hit the 38% retracement at 111.80, 111.90 actually, but you can see it's the 38% retracement is right there. We came back down, tested this very minor trend line here, in Europe, and we're bouncing back. The euro is very well bid, Dale. I mean, it looks strong, and the Aussie the New Zealand looks strong. The Aussies firmed up. The pounds firmed up a little bit. The dollar looks vulnerable at this point, and so that we got to watch pretty carefully. And I'll tell you, I think the risk is right now that the euro blasts through this 112 level and maybe spikes up towards 112.10, which would be the 50% retracement. I know it's not very far, and we're not talking a lot here, but the risks are that the euro starts squeezing a little bit. My biggest fear right now, and my biggest issue with being long the euro, is I know that a lot of the retail market is pretty long the euro as well, and so that is a little concerning to me. But at the same time, I have to go back to the daily charts. This pullback here that you see right here, okay, this pullback from the low to the high, this pullback right here is only a 38% retracement. And so with that being said, if it's, I always tell traders, if you have a move and the retracement is shallow, the risks for a continuation move are greater. So if we only have a 38% retracement, there's a high probability, or a higher probability, excuse me, thank God it's Friday, of an upside breakout and possible move higher in the euro dollar. In this case, it would be the euro. Now, the flip side to that is, Dale, is that we have really major resistance coming in at 114. I think this is where the rubber meets the road. This is where you look at the dollar, and if you really want to see the dollar buckle, we have to break through 114, which is this channel resistance here. And should the euro dollar break through 114, then we're going to start, a pretty, I would think, a pretty big dollar pullback. And when I say pretty big dollar pullback, I mean you start looking at some of these moves, like the US dollar Swedish krona, for example. And we went from 630 to 940 in a couple of years, from 2014 to 2016. I mean, that's a hell of appreciation in the dollar. there's a risk that we give back some of these gains, and you could take the US dollar Swedish krona maybe back to 8, take the US dollar Norwegian krona maybe back to 8, maybe a little bit lower. Those are all, in my opinion, they're risks with the dollar is, if it really starts to weaken here. Now, the other big news of today was the dollar Canadian. The dollar Canadian, we had a weak inflation report, the weak CPI data come out of the Canadian.
Wow.
So the dollar Canadian, now the hourlies are pretty overbought right now, but we ripped back to 133, and we held. This is really all key support. I mean, if you look at the daily chart, I mean, this is all very, very critical support in the dollar CAD, all around the 132 level. So we held here, and we're bouncing back pretty good. Remember, we have the 200-day moving average coming up again, which comes in at 133.30. So we could quite possibly get back up there. But the move above 133 here, it's a little suspect. You got to be a little careful, with the dollar Canadian up at these prices, especially looking at the euro dollar as it's pretty firm right now. Now, obviously, if the euro dollar is firm and so is the dollar Canadian, that means the euro Canadian's having a hell of a rally. And here's the euro Canadian off of the lows, pretty strong. This is all measured, which bums me out because I was actually, a couple weeks back, I was short the euro Canadian up here, up in this neighborhood around the 152 level. But you can see this is a measured move, and it worked out perfectly. I mean, this is about as textbook as they come, like the maximum amount of the wedge, it targeted the very bottom of the wedge. Now, I haven't been trading the euro pound. Hold on really quick. Excuse me 1 second.
Sure, buddy. Yeah, I look at this euro CAD, and I'd love to see it move back up to 150 for a short. I still think that there's going to be a short. CAD's providing it. CAD actually surprised me today. I wouldn't have expected this after yesterday's action, but I think you'll have another chance to short the euro CAD up there.
Yeah, well, the problem with the inflation data it's not just a Canadian issue. It's a global problem. Right?
Yeah,
we're still faced with the same problems that we've been faced with for the last several 5-6 years.
Too much stuff and not enough demand.
Yeah, I mean it's really an inflation issue globally. It's not just every central bank has tried. Every central bank has tried to stoke inflation and by just this ultra loose monetary policy, and it's been a problem. The Fed, the Bank of Canada, the ECB, the Bank of England, maybe the Bank of England.
They got asset market inflation, but not commodity price inflation.
Yeah, I mean, a lot of the inflation that we've seen is more on the, maybe on the energy level, but and maybe some food costs have risen a little bit, but most durable goods haven't. So, that I think is going to be an issue that we continue to face, and that's why. It's going to be real tricky for central banks moving forward, in my view. But anyway, that was the dollar Canadian. The bottom line is we held 132. But and obviously today is not the day where the dollar Canadian breaks down.
No.
But I have to point out, and let me pull up a different chart here. I'm going to take the U.S. dollar Canadian, but I'm going to use a different data feed provider. So I can do a little bit of drawing. So here's the dollar Canadian on Orlando, all right? And if you take a look at the dollar Canadian here, and let's just go back to, you know, this low that was back here in 2014, right?
Yeah. Yeah, right there.
And you look at what the Canadian has done, and the dollar Canadian is broken. I mean, we may be up right now, but it's broken. So when you start talking about, you know, the dollar, and you go look at the euro, and you're like, oh yeah, you know, is it possible that the euro, you know, breaks out above 114? You know, I think it is, and I'm long too. I'm not just talking my book. I've been saying this because we have been holding. This is the trade that I'm in, and I got in what, Wednesday night or Wednesday afternoon, being long the euro when we broke past this this trend line here. So I bought the euro dollar right here at a 111.50, and I'm still long. I mean, it's been a pretty frustrating trade since Wednesday afternoon. But the fact of the matter is, and the thing I keep explaining, is that we're holding a 38% retracement of this move post-French elections, and we have not given back those gains. And the euro dollar is holding up quite nicely. Now, if the euro dollar does start to move higher and actually breaks above 113, like let's say going into next week, you have to look around and say, okay, well, you know, where else can the dollar, you know, weaken against? I mean, you look at the pound. The pound has had a successful test of support.
Yeah.
And we're pretty well bid here. I mean, I'm actually quite impressed with the cable and the performance. And you know, you have to go back to like the elections when, you know, Prime Minister May lost her power. I mean, or is, you know, in the process of losing her power. I mean, okay, so are we going to have a soft Brexit? Is that going to be a little bit better for the cable? Maybe better than what you know, the market was anticipating. You know, so maybe the pound trades back up towards 130. Maybe the pound trades back towards 132, 135. You know, you take the Aussie dollar. You know, the Aussie dollar has been stuck in this range. We held the 200-day moving average overnight, and we bounced. You know, so the Aussie dollar, after been beaten down forever, is developing like a wedge pattern. We're in the middle, you know, in the apex of the wedge. You got the Kiwi, which is similar to the Aussie. I mean, and with this week, the Kiwi is within
knocking at the door.
Yeah, it's knocking at the door. It's within 40 pips of really, really, you know, trying to hold on really quick. You know, really trying to take off here. And if we break through 73.20, that thing's gone. Dollar Canadian again. You know, I pointed out we're just above 132, but if the euro dollar starts to make a move higher, does the dollar Canadian eventually break through? Does the dollar Canadian actually break through 132? And then again, you have like the Swissy. The Swissies had a hard time rallying. I mean, we get any type of risk aversion, and you know the Swiss might come back in the demand. And this trend line right here. You see this one right here?
Yeah.
I mean, we're again. It's like the Canadian.
A lot of back tests of broken trend lines.
Yeah, we're broken here. You got the Norwegian krona. And this, I'm short this after this. By the way, if the U.S. dollar Norwegian krona ends up on its lows for the week, that's going to be this candle. You can see this really long wick here. If we close.
So you missed the goal, but your trade selection for like an oil-related short was better here than in Canada with what happened in Canada. I know you and Steve were shorting this one.
Yeah,
so,
I mean,
see, so sometimes you make the right choice, sometimes you make the wrong choice, but this was a great trade selection.
Thank you.
Yeah.
This, you know, it was. I've been short the last couple of days, and it's been working out beautifully. But you know, again, you look at broken. Again, I'm just trying to point out broken charts. Broken. Dollar Swiss broken. Dollar Canadian, we saw it already, but I'll do it again. and you can do this one.
Yeah.
Broken. Okay. US dollar Swedish krona, broken. Okay, and I'm short a little bit of this too. So you got US dollar Swedish krona, US dollar Norwegian krona, US dollar Swedish Swiss franc, you got US dollar Canadian, all broken longer term, and they're going under the radar because it's not the other majors that are broken. It's like a lot of these like mid majors, if you will, that have broken down. So and then going back to like the dollar index. Here's the dollar index. I mean, the dollar index looks broken to me. I mean, we had this false breakout above the 618. We reversed. We broke this trend line, and we haven't been able to recover. And I know the dollar index happens to be up for the week, but again, you look at like the daily chart here in the dollar index. The dollar index looks like it's rolling over, and I know everybody is bullish the dollar because the Fed's raising rates. The U.S. economy is steaming ahead. Blah blah blah. Yeah, well, tell me then, why isn't the dollar index above 100 right now? You can give me all the excuses you want why the dollar should be higher, but it's not. I mean, yeah, we've had a nice recovery this week, or the last week and a half since we bounced off the 618, but that's expected. When you get to a golden fib like the 618, that's expected. Yeah, so we bounced off there, but how vigorous has this bounce been? Not very. So, if it was, when you price discovery is interesting when you're watching price action, okay, in the market. When a price gets to a value proposition, where the market feels that oh my God, it's so valuable that I've got to own it here or there, then you get a sharp reaction. That's what we call a V-shaped recovery. When we get a reaction that looks like this. When we get a reaction that looks like this, then you go, oh man, that was so valuable. That was such a great deal down there that everybody's buying. But in this case, you gotta, that tells me that the market is not so convinced that the dollar is the right play at this point. It's bouncing because it's logical that we'd bounce off a 618 retracement. Of course, that's why we bounced here. But really, is this a huge V-shaped recovery? No, to me it's not. And so that's why I think the risks are that you have this, the risks are at this point that, we have this like consolidation and quite possibly another move lower. And that's why I'm positioning myself short the dollar right now, because, it makes sense risk reward wise. I know where I'm wrong, right?
Yeah, it gets through there. Maybe even though it's broken, if it gets through that level, we could have a back test of your uptrend line that was broken.
Yeah, something like this. Yeah, sure, yeah, something like that. But I'm wrong here.
Right.
That's where I'm wrong. Right there right. Is I'm wrong. I know I'm wrong.
Right.
And as a trader, we can that's the only thing we can control. We can't control anything else. I can control my risk. I can't control headlines. I can't control Fed speakers. I can't control economic data. I can't control anything. I can control my risk, obviously to a certain extent. I mean, no one can protect themselves against a Swiss National Bank, floor removal, type of situation, which we had, a couple years ago. No one can protect against that. I mean, you're screwed, if you're on the wrong side of that. There's no if and or buts about it. But 99.7% of the time, what we can control is our risk. So I know where I'm wrong, and I'm giving you the reasons why I'm shorting the dollar, and hopefully that makes sense to everybody. Dale, do we have any questions? I'm going to be jetting pretty soon, and I know Nick is coming in today.
How much do you risk per 10K? That's it.
Here's the thing. For a trade, in my opinion, you don't want to risk much more than 1%. I try to keep my risk maybe a 0.5% to 1%. So when I say that, that means if you have a $10,000 account, what's 0.5%? $50, right?
Right.
Or a full percent is $100. If you have a $10,000 account and you're risking $500 per trade, you lose in one trade, you're down 5%. I know for me, managing money, it's not easy to make 5%, especially in just one trade. For me, I'll risk a 0.5%, maybe 1% if I'm getting kind of aggressive. But that's how I manage risk. I think that's a good rule of thumb. Now there are special situations where you're like, oh, I'm going to take a pretty aggressive position here because, it makes sense. But there's no set, like, for me, there's no set like pip, like I'm only going to risk 20 pips or I'm only going to risk 10 pips. No, it's more percentage risk of your account value based on the trade that you're trading and based on ATRs because, right now, you had a range yesterday in the euro dollar of probably like 42 pips or something like that. Today the range is pretty tight too. So ranges are tighter in the summer. So you might be risking less stop wise, but you meaning less pip wise, but you're to keep your risk reward within your same parameters, you got to end up taking a little bit bigger position. So it depends.
Yeah.
Yeah.
Well, have a great weekend, boss.
All right. Well, you too, and I want to wish everybody else a happy Friday. I'm really, honestly, very happy this week is over, so I can get some sleep. So, for some reason,
try that herb I recommended.
You know what that doesn't help is that last night that it was like 9 o'clock at night. And I let the dogs out, and it was literally like 90 degrees outside. It was disgusting. Yeah. It was disgusting. It's so hot here in Phoenix. I'll complain about it for the next 2 months. So don't mind me.
Buddy. All right, buddy. Well, thank you very much for taking some time today to and it's a pearl about your risk management. Blake, people just don't have the patience to grind it out. They want to make it happen in a hurry.
Right. Everybody thinks it's I'm gonna get rich off this one trade. It's like no, if you're in for the longer term and the longer haul, it's all about grinding it out, man. Little gains here. Don't let your risk get away from you. Don't let those bad trades get away from you, and grind it away.
I mean, you could even use a baseball metaphor. The biggest home run hitters were also the guys that struck out the most. Yeah. And they can afford to strike out. We can't.
Yeah, and the old baseball. There's a lot of baseball analogies, but home run hitters are not the ones that win the game. It's the guys that get on base. It's the hitters. All right, you guys have a great weekend.
All right, thank you, Blake.
Thanks, Dale. Thanks, everyone.
All right, so Nick, if you could hear me, I think you wanted to take some time and show a few things.
Dale.
Oh, hi, Steve. I thought you were busy with meetings.
Yes, I am busy with meetings actually, but I had to postpone it because Nick is running today our
yes, Periscope.
Yes, our first Periscope.
She's in a submarine and she has the Periscope.
Exactly, and she's about to torpedo, several trades. No, I'm kidding.
Okay.
So yeah, she can't. We will adjust from next week to be able to do that from a separate computer, so we can so she can actually join because she can't be at both at the same time. So I'll.
I know you were liking silver over gold yesterday, Steve. So I think it's outperforming gold. Yesterday it was.
Yes, it's actually double the percentage up today. And yes, I preferred silver for various reasons. I also saw a cleaner setup, but I have to tell you that currently I see both silver and gold at resistance. If you want to give me the screen, I'm going to show you what I'm seeing, and it's actually what kept me from participating in those two trades, because I had the resistances close by for both of them. And
you have it.
Okay, tell me when you can see me. And
Got it.
okay, good. So this is gold. Okay. We obviously got some kind of a reversal. That's not my main case scenario, breaking to new highs. We were talking about the alternative case scenario, which is a flat top triangle. So in this case, we expect something like that. As I had said, I expected a reaction from between 61.8 and 78.6, because in between them we also had the 200 DMA, the ascending triangle support. So if gold was to keep the bullish scenario alive, it definitely had to rebound maximum, not going below 1231 for sure. So it had to rebound, between here and there. It did. Now the question is what happens from here, because, okay, did we now turn bullish? No, because for me this zone around 1260, call it, is very important. So if I see a rejection immediately from here, we also have the 50 DMA. It's a zone that has created, has provided support and resistance plenty of times. So I want to see what happens from here. And silver is showing something equivalent, which is this. We have the zone of 1675 here. So we're banging our heads right on top of it at the moment. So, for me, okay, yes, did we reverse? We did. Did we reverse from, places that we saw that are likely to create reversal? Yes, we did. But what happens from here? We'll have to see on Monday. So a rejection from here, to me, is going to be very bearish. A penetration, then I'm seeing an easy target of 1725. 2025 for silver as the next target, and for gold, if we pass above 1255, 1260, then there's a good chance that we're going to move to 1276 and then back to the double top. For the time being, let's just call it a double top. We'll see what it is. As I said, very likely it is a triangle. So that's the case with gold and silver, so it needs a little bit more patience. If I try to go over something, because I was in a meeting that Blake has already seen, with us, shown to the people that are attending, please let me know, because I have no idea what you talked about. This is Kiwi. This is another thing I'm monitoring. If you remember, I was short Kiwi, and I actually closed the pattern in play with some profit, because when I saw this kind of a reaction, which is a clean triangle that has been formed, I immediately said, if you remember, that I'm closing this position, and the reason is very simple. Even if it moves lower, I'm doing the right thing, because triangles are very rarely reversal patterns. Yeah. They are most commonly continuation patterns. Very often they are fourth waves, etc. So that doesn't mean that we're going to have a huge continuation. You might see a break above the triangle, a retest, let's say, of this high at 73.75, and then a deeper correction lower. But for sure,
that's right. Isn't that an Elliott rule, Steve, that on wave fours that your thrust out of it is terminal?
Yes. But let's define terminal here, right? Terminal means for the current impulse. It doesn't mean that, that's it, you get a major reversal and that's it.
Okay.
So,
I learned something.
Yes, exactly. So, getting a fifth wave doesn't mean in any form or type that that's it. Then, from that point, it's bearish. I mean, it's very likely, it's more common that you're going to see, let's say, an ABC or a more complex correction, and then you're going to resume higher, except if the five wave you're talking about is a C of an ABC. So, you have to put everything in Elliott wave, you have to put everything into context. I mean, it depends on what the kind of time frame you're looking at. But I'd rather not go more into detail, because as you very well know, we have our specialist, which is Greg, and something, I think it's a good idea. Of course, this is your show, so you arrange those, but I think it's a good idea if on occasion we we devoted, let's say, every couple of weeks one webinar for purely for Greg to run some kind of an educational.
Oh, it's not my show; it's ours.
Yes,
that's a great idea. That's a great idea.
I think it's going to be really nice, and Nick can do the same because both harmonics and Elliott waves are decently complicated for people that are not into them, and very often people do not get involved with them because they have a look of some analysis and they say, oh, this is complex. So
it makes your head explode. But it really isn't. It really
exactly,
isn't.
But it really isn't. I mean, there are some few basic rules that once you comprehend them, then it's a matter of experience. I mean, the more you start looking at charts from that perspective as well, because as you know, my main analysis has to do with basic technical analysis. I started by monitoring very lightly Elliott wave, and by doing that, I became better and better. Of course, I'm not at the level of Greg because I don't have the time to be as granular as he is, which he's going to go down to a 1 hour chart, then to a 4 hour chart, then to a daily chart, then to a weekly chart, and he's going to do all the counts.
It's tough to be better than the Wizard of Waves. That's all I can say.
Exactly, the Wizard of Waves, indeed. That's something I wanted to show with Kiwi. I don't know what kind of questions do we have, by the way, so I can.
Well, you know what, Luca has a look. If you look at it, he said.
Let me see.
I think it's Kiwi Yen. He called it a Nostra Pinkert situation on Kiwi Yen, so there's probably a 3 drive in there. You see it up there? It's near the top of the question box there.
So at the beginning, you mean, of the questions?
Well.
Yeah, Kiwi Yen. I found it. Don't worry about it. Let's have a look at it. By the way, Kiwi Yen, thanks for reminding me, because you remember that we talked, I think it was yesterday, about Kiwi Yen. Yes, I see what Lucas says.
Luca bought the bottom of gold on the solstice.
That was a very good trade. Okay.
Have you taken partial profits, Luca? Take half off.
And he also sees some RSI divergence here. Okay. Yes. Okay. Duly noted. Yeah. Okay, let's go to Kiwi Yen because I think we visited that yesterday, which is also.
I think we talked more about Aussie Yen. It was a weaker formation because Aussie's been underperforming.
Yes, but remember what I said yesterday. This felt unfinished. You remember what I said? Right. When we were down here at the 61.8, there were friends asking, okay, is this a good place, for it to reverse? And I understand why they were asking, because we had this interesting zone. It had provided support several times here. And it was also the 61.8. So it was at least a confluence of 2 factors. We also then got a very nice candle here, this pin bar, but then we got rejected from here, and then it started showing that it's showing more or less what Kiwi shows, which is like a triangle. So we already incrementally registered a new high today, and perhaps we're going to move a little bit higher, but from that point I think we're getting very close to some sort of a reversal. Now we're going to see what type of a reversal it is, but for example, I think I also mentioned yesterday we're very close of perhaps seeing something like this. Mm-hmm. Okay, so this is what I think for Kiwi.
Okay, you've got some questions on oil.
Yes, oil.
About a potential bounce on the oil.
Yes. Okay. As I said yesterday, this is an area that interests me a lot. Why? For 4 different reasons. Okay, 3. The other one is minor, so I'm not going to take it into consideration. 1, I have this descending channel here. 2, I have this major area that if you go back even to 2015, it has produced several times reactions, either bullish or bearish. So let's call it a demand supply zone. Okay. Another reason is the fact that the DSI, let me pull it up. the DSI for oil is currently at 11. And yesterday it was at 9. Those are extreme levels. For whoever doesn't know what the DSI is, that's Daily Sentiment Index. And any reading below 20 is considered very bearish, and any reading above 80 is considered very bullish. So with a reading of that oscillates currently at around 10, that's an extreme sentiment reading. So that the market is currently, at least not from positioning, don't be confused. DSI does not show us positioning, it shows us market sentiment. Okay, those are two different things. Sometimes they align, and that's, you know, that's a better, that's even a better signal. But sentiment at the moment is extremely bearish, oil. So that's a third thing I'm looking at. So as I said, trying to pick a bottom or a top is, you know, very dangerous. But I would like very much if I saw a reaction from this zone. And, you know, you never know what happens during a weekend. I think Nicola has
double inside days, Steve.
Yes, double inside day.
I think Monday will have an outside day.
Yes, that's a very rare occasion. I mean, getting a double inside day. Yeah, and a very common way to trade that is, you know, to trade the breakout of, you know, either the second or the first one of the days. Depends on, you know, depends on how safe you want to.
So the most bullish thing you could do for a correction would be to start off lower Monday, maybe hit your red line again, maybe even retest the low of the move, and then take out today's high and yesterday's high, and there's your bear market rally.
But I can tell you one thing for sure. A close above, let's call it 44, sorry. That's going to squeeze the market. Yes. Yeah. That's going to squeeze the market.
You know, Armand Shine's an excellent trader. I mean, he called the top in pound Aussie. He's called a lot of decent moves. He has a look for you in pound Kiwi, and I know there's a lot of interest in those.
By the way, a friend is asking for DAX. I'm going to go over the DAX. Okay. So, Armand, you said, who did you say that has a look? Armand. Yes, Armand. Yes, I see. Yes.
Yeah.
Thank you.
Armand's been with me for, I don't know, 3-4 years now.
Let's see what our friend sees here.
Okay, he's looking for a low to set up in here. Nice look.
Okay, let's go back to it. It is also a trade of trying to catch a falling knife. Let's be honest with that. But let's have a look at it. Okay. What I like about this trade, and we mentioned it yesterday, we have an equality of legs here, the two legs, okay, here. On the other hand, I don't like the structure as it is at the moment. I mean, we haven't managed to master any bullish move. But I'm more or less betting because, you know, I'm gotten used to seeing daily charts.
Wow, black hole.
Yes. I've gotten used to watching daily charts enough to kind of recognize patterns in lower time frames even by looking at them. And this is a lower time frame. This is a 4 hour. Sorry, I'm not going lower than 4 hour. You know, it's not my trading style. But let's see what we have here.
Right. Nice. Falling wedge.
Yes.
So there could be one more trip down, maybe even a throw over.
There could be. There could be. But one thing is for sure.
The divergence is glaring. Look how long it's been diverging.
In the 240 it's glaring. It's glaring indeed. It's divergence since we actually reached this low. So I'm going to tell you something. I'm not going to be a buyer at the moment, but I will definitely be watching very carefully what happens with this formation.
It's on the Volgi radar screen.
Yes. From this point on, it's on my radar screen. I mean, I'm watching them every day anyhow because I'm also looking for bottoms in pound Aussie and pound Kiwi. But now we have something more solid in a lower time frame. So yes. Okay. Okay. It has potential. Let's see what it does. Let's see what it does. It has potential. Perhaps let's combine the view. Okay. Perhaps that last thrust that we said in Kiwi, that it has perhaps one more week push higher. One more week, I don't mean a week like 7 days. I mean a week with EA, like, not strong push, new highs, perhaps trap people along there, and then Kiwi reversing, pound holding much better. That's going to give us like a move like this, okay? In which case, even if the bounce is corrective, I think a minimum target of 180 is easily achievable. It's the 38.2. It's also, as you see, a level that has provided support and resistance here. So, yes. I think even if the bounce is corrective, somebody at the break of this wedge can easily aim for 180. And your risk reward in case of a wedge break higher is going to be extremely tight, because even if let's say it breaks from current levels, you are risking, let's say, 173.70. From, let's say, you're going to be risking less than 100 pips to make, what is it, 550? So it's an amazing risk reward. So summarizing, I wouldn't be taking this long yet, but on a break of this wedge, I'm going to be involved actually. Okay, thank you for bringing that to our attention.
Yeah. He's got a great eye. He's got a great eye.
Okay, so let's see what else.
Like
the
DAX.
He's not
always right, but he's got a very good eye. And Luca's saying that the bonds might break 2.1 today. So Blake was talking about the unsuccessful efforts of global central banks to get inflation going. And I think the bonds are the main message that they haven't been successful, or we wouldn't have had this type of bond recovery we've had over the last 5 months.
Yes, that's a valid point, but I think that it's multifactorial. I think that the inflation not picking up, I can think of at least 2 more reasons. One of them is going to perhaps will sound a little bit ridiculous to some people. One of them, in my opinion, is that we are not accurately measuring inflation, as simple as that. I mean, supposedly, since the financial crisis, the accumulation of inflation must have been something minimum. Does it feel like that to you during the past 10 years, Dale? Just
I know we talked about that. No,
yeah,
not
I'm asking you like a consumer, like an average person that's out there and has regular expenses, etc.
10, 15 years ago, I was spending $1,500 to be oceanfront in San Diego. Now I spend more than that to be 40 miles away from the coast.
You see, Stelio, please speak a little bit louder. We didn't answer immediately because we could barely hear you.
Can you hear me now?
Yes, we can.
Okay,
yes,
I just wanted to say, why do you think inflation is not being accurately reported? Because it doesn't include, healthcare, education,
right,
and food, and or some food and energy.
And things that that if you don't include them in developing economies, it's a joke.
And breathing in and out, right, Stel?
Absolutely.
Big charge for that now too.
And it's funny because the weighting is quite high on things like consumer electronics.
Oh yeah.
And other things are completely.
Like we're going to be buying 10 televisions per year. Yes.
Hey everyone, let's have a laptop for barbecue a laptop for dinner tonight.
Yes.
Exactly.
Huh? What do you think?
I'm not saying don't include them, but be fair and have a good weighting on all the items and include all the important items like healthcare and education, all that. I mean, come on, healthcare. We all know it's going up 10% a year.
Especially, Stelion, this is one of the other factors. Especially when it's also another factor of low inflation, that the demographics of the developed countries are very specific. I mean, we're growing older. The populations of developed countries are growing older, and this by nature is disinflationary. Okay, but also that enhances what you're saying, not including medical costs at societies that are actually growing older and medical costs are a big part of their expenses is ridiculous.
Yes. As you said.
What a great call by our guest yesterday, looking at the DAX. Anna Kozin Nasser she was showing the DAX during the whole interview yesterday. Sure looks like it's on the verge of breakdown. You got a little three driver, the last three drives, everything looks.
And we also have two levels of support here. It's this ascending wedge, which we even had an overthrow from it.
Oh yeah.
And
she made the point. She looks for, like you guys talk about, positioning where there could be the most pain. And the last few months, people have been taking money out of the U.S. and buying Europe and emerging markets because they had better values. You know, they considered the U.S. stretched, and the DAX looks pretty ugly to me. Someone asked me to take a look at the S&P. Again, that 230, 130 closing under there would be a 2-week reversal. I still think it's not.
Just have a look at this.
Go ahead.
Just have a look at this. Since last March, roughly, February, whatever it is, we have been up around 49%.
Wow.
Okay, I mean, just think about it. I'm telling you, let's take the best case scenario. The best case scenario. Europe continues to outperform relative to expectations, of course, because that's the whole concept. I mean, people should never forget that, you know, it doesn't matter if an economy is doing great, good, moderately, or whatever. It matters what the market was pricing in. So if the market is pricing in that you're going to do excellent and you do good, the market will go down because the market is a discount mechanism, okay? It has already discounted that you're going to do excellent, and if it has to readjust that you're going to do good, it's still going to fall. I'm just giving a random example, you know what I mean? So even if, let's say, okay, the Europe keeps outperforming or whatever, the question is the following. How easily it is to see after 50% higher within 15 months, roughly, how easy it is to see, you know, just a decent retracement. I mean, let's say to 12,000, you know, something very minimum and basic. And, you know, I mean, the structure here has started looking unhealthy, you know what I mean?
Yeah.
So be very careful if you're long DAX from current levels. I don't see the point here. I don't see your risk reward. Except
and what I thought was a relative weakness is holding up the best today, the FTSE.
The FTSE, yes, yes, indeed.
See how they fool you?
Indeed. Although it's down today as well.
Yeah.
For people that haven't seen it, this is this is a scenario we're monitoring for FTSE. We have a clean head and shoulders formation up here. Perhaps the possibility of this becoming the head of a bigger head and shoulders formation. And, you know, this is also, it was also within an ascending wedge, which we broke and retested. And somebody can also see that it is in a bigger wedge as well, which the support is almost testing. It's a little bit lower. So, you know, a lot of patterns here in FTSE that if they get triggered, this is going to end up, you know, very badly for the bulls. But, you know, we still need confirmation. It's close, but we're not there yet. It's very close. Now about SPX, what can I say? I mean, this thing is completely pinned down. I mean, this price action is just ridiculous. Let's just look at it. Just counting how many days lately we might have some movement during the day, but more or less we close exactly where we opened. I mean, it's like that somebody has switched it off completely.
That's why the VIX is where it's at.
Yeah, of course. I mean, it isn't going anywhere, or at least it isn't going anywhere fast.
We're trying to put people to sleep.
Regardless, we have a little ascending wedge here as well.
Just keep in mind that, you know, a few summers ago, I think it was 2 years ago, we had the Dow in August open 1,000 points lower, and they brought it back.
Yeah,
That's
I
when
remember
the
that. I was actually
Chinese, when the yuan was going through a devaluation stage, and everyone's away, Labor Day's around the corner, so if you're holding positions in the summer, don't be too complacent that nothing's going to happen, because I've seen major events in the summer. In fact, the launch of the bull market in the United States happened in August of 1982 at 760. So we had the beginning of a bull market where everyone thought, nothing's going to happen until Labor Day. Of course, you could have waited 10 years to buy the market, still made a fortune, right? But there are times where August can turn out to be a pretty wild month. So don't go to sleep.
That's true, and even if a bearish move for stocks doesn't manifest within the summer, which is likely, I believe that the chances of not seeing a strong one, and we see from there what a strong one means, if it's going to be a big correction or whatever, within 2017, in my mind, are absolutely zero. Absolutely zero. Nothing is zero. I mean, okay, scrap that out. Very, very low chances of not seeing such a move manifest, because we keep seeing that political risk keeps increasing, geopolitical risk keeps increasing, and the market, the Fed has started hiking, and it has actually indicated in the last Fed meeting that it's quite devoted to this cause, and the markets keep ignoring everything. And I do believe that that's temporary. I do believe that even with a lag, that's going to, perhaps in combination with some kind of a trigger, suddenly the market is going to wake up that it's not pricing in a lot of things that can go wrong, especially at current valuations.
Steve.
Yes, mate.
One thing to note is that the bond market also is doing a similar thing. Like yields are not going up. Like 10 years at where is it now? 220. I can't remember. So it's as if the market says, okay, you hiked 3 times. You're telling us you're going to keep going, but we really don't believe you. It's as if the market might be doing that. Obviously, and I agree with your worry about geopolitical risks and all these risks. Of course, they are there, and the market doesn't care. But I think in terms of the Fed's hiking, yes, they are saying, oh, we're going to keep hiking, do this, but maybe the market just doesn't believe them. I don't know. It's difficult because the bond market is telling us exactly the same thing. So it's a tricky one.
Yes, and something, but the important question here is the following. What is it more dangerous for bonds to keep signaling that they're not buying the increase of interest rates, or the opposite? Because, sooner or later, I mean, the curve is flattening, and you know what that usually indicates, especially when it persists, right?
Oh yeah, absolutely. I agree with you. I'm just saying that the bond market is kind of telling us the same thing, but yeah, it's difficult to make sense of it. Really, it's difficult.
Yes, but I'm pretty sure that 2017 is not going to end up as a boring year. I'm really pretty sure about it.
Yeah, I agree.
Okay, I'm just trying to locate my guest. Louise, can you send me a question? Oh, there she is. Okay.
You found her?
All right. So, okay, Louise is here.
Okay, very nice. So I'm
going to be a hypnotic. It's going to be a hypnotic interview. No one. She promised me that she's not going to turn anyone into a chimpanzee. Those hypnotists that have shows and they get people to become.
Anyhow,
they drop a suggestion on them and they become, an animal, or they drop everything, a bad habit or some type of suggestion. So this should be a very interesting interview. In fact, Louise has expanded and is making tapes for traders. So,
by the way, Dale, I want to say something. I volunteer myself. As a person, I'm a big skeptic about anything. I always want proof.
Yes.
I volunteer myself, for whatever you want, honestly.
Okay, Steve, you're the best guinea pig
I'm going to be the guinea pig.
Okay. And I'm Louise. I'm making you a panelist, so I should hear your voice pretty soon.
Bye-bye.
Thank you, Steve.
Have a lovely weekend, everyone.
Thank you. You too, buddy. So, Louise, waiting to hear your voice. I see you're on the phone. Still waiting. Should be enabled. Can you hear me, Louise? Steve, can you give me a hand with this? I don't know why. There she is. Is that you, Louise? Hello? I made you the panelist, so audio pin is sent. So that should work for you. I have Louise's website up here, and I'm just waiting for her to plug in. Louise, I'm getting sleepy. I'm getting very sleepy. Can you hear? Are you there? You have to enter your PIN. Click to send their PIN. Audio PIN sent. Is that you, Louise? Waiting to hear you.
Papu!
Could hear you, Stel. You may want to mute.
Oh, sorry. Sorry,
That's
guys.
okay. That's okay. So I don't know what's wrong, Steve. Can you help me? I've sent her an audio pin. You have to enter your audio pin that I sent to you.
Hey Dale, sorry, I was away from the computer. Tell me what the problem is.
I sent her the audio pin. She's doing it over her phone.
Okay.
And I still can't hear her. Excuse me?
Attending until the end
I
of
made
the
her a panelist.
I don't think she has entered the PIN. At least that's what it indicates here when I mouse over her name. She says attendee can't be muted until they enter their PIN.
Okay. Louise, if you can hear us, you have to enter the PIN that I sent you. Let's send it again. Audio pin sent.
Hello?
Hi,
We can hear you
Louise.
now. Yes.
Hello, I'm so sorry about that.
Hello, welcome.
That's okay, Louise. You know, it's your first time, so very nice to hear your voice and nice to meet you, Louise. Thank you so much for showing up for today.
Thank you very much, Dow, and it's a pleasure to be on this call, so I appreciate you inviting me. Thank you.
And I have your website up for everyone to see, Inspire for Life Therapy.
Yeah.
And we've been in touch. I've listened to at least one of the tapes that you sent me a long time ago, and then you got in touch with me and said that you've developed some tapes for traders that could assist traders. You know, we all have paradigms that sometimes are roadblocks to success in trading as well as life. So why don't you just tell us a little bit about yourself? I know that hypnotherapy was a little later in your career, that you started off with Reiki, and I'm just guessing you went to hypnotherapy because it was a more direct route to get results than, for example, like a guy like Robert Proctor, who through repetition that your unconscious mind takes in, you can create a new paradigm if you have an emotional attachment to an image or so forth. So I'm just an amateur. Why don't you tell us about your journey and your goals and how you help people? And then perhaps you're going to play that tape.
Yes, I'd be happy to play that afterwards. So again, thank you for inviting me on. I'll introduce myself first, and then I'll tell you a little bit about my background and how I went on to become a clinical hypnotherapist. So basically, my name's Louise Nonwheeler. You can see my website. I'm originally from London in the UK, but I've travelled for many, many years because I used to be in the casino business. So I travelled for about 20 years in my early 20s. I lived in Florida. I travelled a lot around the Caribbean, and also then I went on to Australia in 2007. So this is where I had my first hypnotherapy session. After this session with this person, I was blown away by the results. So that's when I decided that I needed a change in my career. So I went on to become an accredited clinical hypnotherapist, as well as doing Reiki as well. I went on to do a life coaching course and also an NLP practitioner course. So from then I came back to the UK in 2010, and that's when I really started to build my business. So I have a very successful practice or practices in the UK. I also offer Skype hypnosis.
Okay. May I ask what issue you went to that your first hypnotherapy session that you were amazed that helped you?
I knew I was going to be asked this question. To quit smoking.
Okay.
So I used to be a smoker, and in 1 2-hour session, after a long, nasty habit, I was a non-smoker, and I haven't smoked since. So that pretty much sold it for me.
Okay.
So from then, I did a lot of research and obviously became accredited in these fields. So coming back to the UK, I built my business, and from then on, I started to see people in trading. I realised that there was a real, there was a real audience for this. So I've seen many traders, mostly private traders, who trade from the comfort of their home or their office. And that's why I decided to develop this MP3 hypnosis recording.
Okay, so let me ask you, what are most of the roadblocks that you're therapeutically through hypnosis helping these private traders with? I'm sure there's varied things, but what would be the most prevalent?
Well, it seems to be the mindset, people's mindset. So say for instance or example, I would see a private trader, they'll come to me and they've had a series of losing trades for whatever reason, it doesn't matter, but it will sometimes knock their confidence or their focus or even their motivation and passion around trading. So what I do with the trader is I work on their mindset, their emotions and their psychology around trading, as opposed to sort of the technical and the fundamentals around trading. And even within 2 sessions, they can see amazing results around this. So it can be very, very beneficial and effective.
Why are some people more open to suggestion and some people are not?
That's a really good question, Dow. My belief is there could be many reasons for this. Some people come to me who are highly anxious or they have severe stress. That can be almost a block in itself. Some people are skeptical. Some people just sort of don't believe in it, but they just need a change in their life. But in saying that, hypnosis pretty much also always works. So once they sort of become more open to it and they realise how relaxing, how powerful, safe and effective hypnosis is, the more open for change they are. And once they realise I don't turn them into a chimp or a headless chicken, then they're happy.
Okay. So did you want to play what you produced?
Yeah, sure. I don't know what the quality is going to be like through the laptop, but I'm happy to play it. So I'll just go on now. I won't be a moment, sorry.
Should everyone close their eyes?
Yeah, why not?
Okay.
So I won't start from the beginning, because the beginning basically is taking you into that sort of relaxation deepener, which is about sort of 10, 12 minutes long. I'll take you straight to sort of the suggestions, that I offer. Would that be okay?
Sure.
Yep, okay.
You're the boss.
Okay, won't be a moment, Dal.
So you were right about the sound quality, Louise. We're not really hearing you. We could hear the music, but go ahead.
Can you not hear the actual recording, the voice?
No, more can hear the background music better than the voice, but
Okay. That's a shame.
that's okay. You know, I just wanted to give people a chance. You know, I always say, Louise, that trading is what we do. It's not who we are. And some of the things that we bring to the table as traders, like you said, are barriers. In fact, I was talking to someone, a very good trader, a few days ago, and he talked about how, you know, he's ADHD, and if he would lose his keys, he would magnify it and tear the whole house apart. So that's how he would react if a trade didn't work out. It's like the end of the world, and instead of having the awareness that I'll find the keys in a minute or two, I don't have to panic. So why don't you talk about some of the things that people, I know that I've had, okay, I'll be an open book, I've had issues with depression in my life and anxiety in my life. I think a lot of people have that don't even admit it. The first thing is the awareness to admit it. So have you noticed with traders that it's not so much their methods, it's some undercurrent in their mindset? And even some people, have you met any people that are not successful traders because they feel they don't deserve success?
Yes, I have. I actually, what I do in the sessions is I spend a lot of time talking to the person. Not so much about trading in the beginning, because we get onto that, but what's important is I need to find out about the person. I need to find out about their behaviors, their beliefs, how they perceive themselves, which is really important, and the world around them, and so much more. So it's really finding out about the person and how they tick, so to speak. So once I find out about how the person they are, it's about changing their mindset. So it could be working with their belief system. They could believe that they're not good enough. They could have a fear of failure. So it's really getting to the root cause and the root reason of the problem as why a person is not achieving the results that they want to. In that time, obviously, because I'm a clinical hypnotherapist, I work with people when they're under hypnosis. And I believe this is a lot more powerful because it's working on the solution. So instead of sort of working on the past, it's about changing things for them now. And that's why I do see a great success in a very quick time.
Well, you have a great demeanor and a great voice, and I've seen I see on your website all the awards that you've won. Why don't you leave us with a suggestion, and I'm going to give the whole community a suggestion to go to Louise's website, Inspire for Life Therapy. Let go of your ego. If you have some issues that you've been trying to cope with your whole life, you know, you don't really have anything to lose. To check this out, and I do believe that you have some sample, what are they called, just little, you could send to people where they could listen to a recording of what you do before they would decide whether or not to retain you and have Skype sessions, etc. So I'm glad that it's kind of unusual. Normally we have traders, they say, oh, the euro's going here, the gold's going there, but I'm a big believer in facilitating a community that there are other things that we need to work on within ourselves that will add to a more positive outcome in what we're trying to accomplish in trading or anything else in life. And I'm curious about it. I may retain you. And I want to encourage people to go to your website. Also, you could follow Louise on Twitter. Your handle is @4_inspire. Is that correct?
Yes, that's correct, Dale, yes.
Okay, so I want to thank you. Sorry the recording didn't work out, but thank you for taking the time, and I wish you all the success in helping people. You and I are kindred spirits. That's what we want to do, is we want to help people in some way, be a guide, have them learn from our experiences. And I'm a believer that hypnotherapy is a very powerful tool if you're with a credible practitioner, and anyone that looks into it should definitely check out the credentials. There are a lot of scammers out there, Louise, that claim they could do what you do. How would you advise people? Now, how would you advise people to know who is real and who isn't?
That's a very good question. There's, for instance, in the UK, there's some very good websites and directories that you have to be accredited and, have all the credentials, to be on these websites. And I always say to potential clients, if you don't want to come to me, always look, say, for instance, on the hypnotherapy directory, which is, I think it's just solely in the UK. But there's websites around the world, and I always say, be careful about the therapist that you choose, because for a person who's experiencing problems or who wants change, it's so important, two things. One, that you find the right therapist, and two, that you find the right therapy. And obviously the most important thing is that a person wants to change. So once you've got those three things under your belt, it will be amazing the results that you can see in your life.
Thank you so much, Louise. I hope some people follow through and get a hold of you and at least take a listen to what you have to offer. It's a pleasure knowing you, and if there's anything I could ever do in the future to spread the word for you, I'll be more than happy to do so.
Thanks, Dale. You're a star. Just to let you know, lastly, that there will be samples of my recordings on my website, because I know they're not on there at the moment, but there will be samples over the weekend, so people can listen to part of the trading hypnosis recording.
Thank you so much, Louise. I appreciate.
Thanks,
I'm glad I reached out. I'm glad I reached out to you on Twitter, and
yes, me too.
I'm a believer. Okay, so thank you very much, Louise. Have a great weekend.
Thanks for listening, everybody, and have a great weekend. Thanks, Dale.
You're very welcome. Thank you, Face. Thank you, community. Have a great weekend. Have a great weekend. And okay, thank you, Louise. So thank you, Steve. Thank you. And thank you, Steve, for bye-bye. And thank you very much, Steve, for all your analysis all week. And thank you, Nick. Thank you, Grega. Thank you, Blake. Did I forget anybody? Thank you, Face. Somebody else I forget. I always forget. Thank you, Stell. Thank you, Stell, for all you do, for keeping my spirits up, and have a great weekend with your family, everyone. Enjoy your summer. Summer has begun, and let's kill it this summer. You're very welcome, Tom. Have a great weekend, everyone, and remember, don't just count your pips, count your blessings. I'll see you on Monday. Adios.